Wherever in the world you are, welcome back. Like, subscribe, and share this video. And please, if you wouldn't mind, could you comment below? So how's your market day going, huh? I guess it's not very good for you, right? Everything's dropping. The world looks like it's going to end. Market's crashing. Well, let me just tell you something right now. Whatever you're selling, I'm buying. Because I'm going to tell you why. If you have a great company right now that's down 20%, 30%, 40%, whatever it is, I'm going to use Tesla as an example because I'm a big time Tesla investor. I bought Tesla 6 times today. I was going to say 5, but I just bought it right before the close. 6 different times. Now, I have a Tesla account that I call my Mad Tesla account. I play with that account. I have, a few hundred shares in there. I'll buy, sell, play with it, sell at the top, buy at the bottom. It's a game. It's like a game fund. It's actually a Robinhood account. And I have other shares of Tesla that I won't say how many, but a substantial amount that I hold long term, up, down, sideways, doesn't matter what happens with the stock. But this mad fund or crazy Tesla account, whatever you want to call it, I have other stocks in there too, but mostly Tesla. I utilize that account to dollar cost average in and out. So whatever shares I had in that account, about 3 months ago, I believe I sold for, I have to look it up, but I sold somewhere around 470, 475, sold all of it, one day, boom, done. Because I knew that there was going to be volatility. I didn't know how much. In fact, I didn't know it was going to be this bad or good, whichever way you want to look at that. And by the way, today when I pushed that button at 220 for Tesla shares, I was like jumping up and down like a kid in a candy store. So, but anyway, I sold that 475. And then I started buying in. I bought in too high. I started buying in somewhere around 350, 360. And then, it turned around again and it started to go down. But I had lots of powder left, finger on the trigger, ready to go. So let me explain something to you. You need to understand dollar cost averaging, especially if you're a new investor. Now, there's long-term investing, which I am a huge advocate of. If you have 10 years in the market, if you have 15 years, 20 years, 30 years, whatever it is, you have plenty of time to make money, plenty of time to make your money back. Don't worry if your great companies go down, as long as they're great companies. Tesla's not going anywhere, just so you know. It's not going anywhere. In fact, it's growing faster than people even realize. And the one thing that hasn't happened with Tesla since this downturn and since Elon took over Doge and all this crap that's going on in the world, and they're burning down chargers and they're keying cars, and what's hilarious about the whole vandalism against the cars is every car, including this one, this Model 3 that I'm sitting in, it has cameras everywhere. If you come within a foot of this car, I have you on video. So the whole thing is really stupid. It's like robbing a house while there's cops sitting inside. It's just so ridiculous. But anyway, let's get back to the point of the video. Is I am dollar cost averaging in. So for instance, let's say I started at 350 a couple of months ago. I started buying the stock and then it started to come down. At my last purchase today, and I've been buying all the way down. Every day I'll buy at this price and then this price and then this price. And then I remember when it got to 240, I'm like, this is it. This is the bottom. And then I loaded up on that day. And then it didn't. It went down. And then I bought again at 235. And then I bought at 230. And then I bought at 225. And today, my last purchase today was at 220, 220.21. So $220.21. I bought my last shares of Tesla. But when you're dollar cost averaging in, that 350, which was my average price per share, that's now down to 295. Actually 294, but let's call it 295. So I am now between 290, between 220. I think it closed at 221 today. Correct me if I'm wrong. But I'm between there and 295 instead of being between there and 350. Now, again, this is a mad account. I'm just playing with this. So I know this stock is going to get back up. At minimum, I know it's going to get back up to 295. So I will easily break even, easily. But of course, I'm not going to do that. I'm playing with it. I'm doing the same with Palantir. But just so you know, you need to dollar cost average at times like this in the market. And I don't care if it's Tesla or if it's the S&P index you're buying or the NASDAQ index you're buying. You need to dollar cost average in. So let's say you have $1,000. Don't buy $1,000. Buy $100 today and then buy another $100 tomorrow and buy another $100 the next day. And if you miss the bottom, that's okay. You'll know when it's starting to go up. So let's say, ABC stock was at $500 and then it went down to $400 and you spent $100 on it. And then it went down to $300 and you spent $100 on it. Then it went down to $200 and you spent $100 on it, right? And then it went down to $100 and you're like, should I or shouldn't I? And then it goes back up to $150 and like, should I or shouldn't I? Then it gets to 200. You're like, you know what? I missed the bottom. Well, yes, you did technically, but you can still buy in at that 200. So you're still catching it on the way up before it gets back to its 500. You're still ahead of the game. Now, ideally, you want to catch the bottom and then you ride it up, but it's not necessarily too late. Now, it's much easier if you're controlling your own investing and your own funds and your own money doing it this way. But if you're not doing that and you have a broker, different story. But if you are, this is going to take a lot of work. You need to be paying attention. Like I was basically online all day long checking my Tesla, checking the price, checking the amount of shares going in and out. And as it was dropping, I was there, right there to press the button. And yes, there are people that are going to say, well, if it started out today at 350 and you bought it all the way down and you still bought it at 320, look at all the money you lost. Why didn't you just wait till 220? Nobody is that smart. Maybe God, but I don't think anybody else knows that. So you take your lumps, you dollar cost average in on the way down, and then you ride it back up. And it will go back up. And if Tesla goes bankrupt tomorrow, all your money is gone anyway, because something catastrophic I guarantee you, something catastrophic will have happened in the world if a company like Tesla is going out of business. So if it's going down in flames, I'm going down with it. It doesn't matter to me either way. And I really mean that sincerely. Now listen, this is not financial advice. Obviously, I'm not a financial advisor. I have no qualifications. You have to do your own research. I highly suggest that you get a financial advisor. I have one. Even though I have this mad money account that I play with, I have most of my stock assets, my investment stock market money is with a financial analyst. He's a fiduciary. He is responsible for my money. That's very important that you do that. But take it from a guy who's just a little bit older. Don't be me in 1997 when I didn't jump on Amazon when it went public at $18 a share. Don't do that. I bought that stock when it went public. About a year later, I sold that stock because I had a piece of equipment that I needed repaired in my restaurant. And I really never got to buy it back until years later. I did get in years later. I made money on it. I'm still making money on it, but don't do what I did. So if you have stock right now, and by the way, there was a report out today that Charles Schwab is trying to convince some of its clients to get out of Tesla. If somebody is telling you to get out of Tesla right now, fire them. I'm telling you right now, fire them, because they're making money on you as you sell. And when you try to get back in, it's going to be too late. I don't know what's going on over there at Schwab. And this may be an isolated thing. I don't have any solid information on this. There's just rumors going around. There's one guy who's talking about it. It's all over the internet. You can look it up. But to me, that's very, very bad advice. Very bad advice. I don't believe you should sell good companies. I wonder if that same analyst was telling people to sell Enron back in the day, or telling people to sell something that Bernie Madoff was investing in. These financial analysts, there's a lot of corruption that goes on Wall Street. We all know this. There's backroom deals, there's favoritism, there's all this stuff that's going on. There's a lot of attention right now on Tesla. There's a lot of people trying to bring it down, because when this company skyrockets, it's going to disrupt an awful lot of people and an awful lot of big corporations. So don't take my advice. This is not financial advice. Do your own research, but be smart. The people you think that are smarter than you are usually not. And a lot of times, those people have been bought and paid for, and sometimes they're puppets of a system that's extremely corrupt. But anyway, do your own research, and happy investing. This is not a time to panic. This is a time to take advantage of what's going on. As Warren Buffett says, when there's blood on the streets, that's when you got to start buying. You buy when others are fearful. And I also believe that the word opportunity, the correct spelling for the word opportunity, is volatility. Thanks for watching.